Welcome to this quick tutorial on how to use the FairValue app, which is made for both the iPhone and iPad. The app will use your expectations for future company performance to determine the current fair value price of the stock. Clearly, if the fair value is far above the current market price, you will likely want to consider buying the stock. The fair value of the stock is determined by many things, but one of the most significant factors is future earnings. In short, the app takes all future expected earnings and uses that information to give you the fair value price, or PE, of the stock. Again, if the app shows that your calculated fair value for the stock is greater than the current market value, you would want to consider buying it. Then too, if your calculated fair value is less than current market price, you would want to consider selling it. The goal of this video is simply to introduce you to the very basics of the app's usage. How to add a stock, and how to input the basic information needed to calculate the fair value of the stock. So let's get started. This is the opening screen for the app showing all the stocks in your portfolio that are under fair value analysis. Stock names are on the left of the screen, and the calculated fair value, market impact, and current market values for the PE, PIG, and stock price are shown on the right. The stocks are sorted based on their fair value price strength relative to the current market value. So the ones showing the greatest potential for price increase are at the top. If you are new to the app, then it is recommended that you review the help and setup content, which can be accessed by clicking on the lower right button. Detailed help can be found in the instructions screen. You will also want to review the disclaimer and privacy policy, which shows strong protection of all user content. There is also a tutorial on the app website. Finally, there are various setup parameters that you can review to customize your app experience. Okay, so let's add a new stock. To do that, click on the plus sign at the upper right. Then click on the new entry to jump to the stock growth data screen. Here you enter the name of the company and its ticker. Once you are done, you can add different stages of growth for the company. Let's add one stage now. The first input is the number of years over which a given growth rate will occur. You can also specify the uncertainty for those years, which will be used in the risk analysis for the stock, which we'll do in a few minutes. The second input is the growth rate. If you have internet connection, the app will show, if possible, the market's expected growth rate for the company. Press Save when done. For this example, let's add another stage as well. Finally, as you see, all other future growth rates are assumed to be 3% in this example, and this is the default, but you can edit and give your own value as well. Okay, as you see, the app immediately calculates and shows the stock's expected fair value PE, PIG, and price. If you are connected to the web and are automatically downloading data, then the current market price is shown at the bottom. For the current setup being used here, the market impact values are also shown, but we will not be reviewing that feature at this time. If you are interested in that feature, consult the help pages. It is often helpful to track your various reasons for considering a stock, and you can do that using the reference notes screen. To visualize your inputted growth rate trends, use the growth rate plot as shown here. As you see, we have inputted two stages of growth rate, and all future growth rates are 3%. You can also see that we are more aggressive relative to available market growth rate expectations, which is fine if you are confident in your data. As you see, there are numerous other analyses that can be done, but we will review just two here: the forward trend plot and the performance risk calculation and plot. Here's the forward trend for the PE and price based on our expected future earnings. The PE is shown on the left vertical axis, and the price is shown on the right vertical axis. As you can see from the bold green price line, there's a steady increase in fair value price in future years. There's also shown a today line, which shows where the current price points are, and shows that the current fair value price is above the current market price. Hence, there is a potential gain available in the stock price once the market has appreciated your fair value for the stock. The PE is shown with a gradual decrease in value since earnings are increasing and the company growth is stabilizing at lower growth rates. Okay, let's look at how the app determines risk. To calculate risk, or probability, of a stock reaching a given fair value price, the app uses the various parameter uncertainty values, either the default values or the ones given by the user, to calculate many possible future outcomes using what is called a Monte Carlo analysis. Let's calculate the risk results and go to the price data screen by swiping across the screen. As we see here, the current market price, which is shown in yellow, is below the expected fair value price, which is shown in green. The white probability distribution curve shows the probabilities of all fair value prices. As we see in these results, the probability of reaching the expected fair value price is somewhat high relative to other price values. However, there is a lot of other possible price values shown, spanning from around $11 to the upper 20s, and each of them have their own probability as well. So a better question to ask may be, is the expected fair value price likely to be exceeded? This question can best be answered by tapping the screen to convert the plot to a cumulative probability plot, which describes the probability of the fair value price being greater than a given value on the x-axis. Based on the data used in this example, you will see that there is a very high probability of having a fair value price greater than the current market value, and that's good. But to reach the expected price value will be less likely, say around 45%. Based on these results, the user may very well consider buying the stock, but may also want to sell it before the full expected price value is reached, and instead seek other stocks that have a stronger price growth opportunity. Let's return again to the portfolio screen. We see that the new Steelcase stock is below other stocks being considered, and so it may not need to be a great emphasis in your purchased stock portfolio, but you may still want to consider it for diversification purposes. Okay, that's all for this quick tutorial. As you can see, the app provides a quick assessment of a stock's valuation based on your own personal expectations of the company performance. In doing so, it offers you a way to directly compare your expected fair value price versus the current stock price to determine if it is worth buying or if you need to sell it. You no longer need to rely solely on the analysis of other investment advisors or news feeds, and that is likely a wise approach. Good luck in using the app for your own stock analysis.